So let's discuss the opposite of the last scenario, the classic bullish divergence. We are being taught that when you see a bullish divergence on the CVD, it means that hidden buying is stepping in and trying to change the price, but they're being covert about this. This is the story that you're being fed out there. And that could be the case sometimes, but more often than not, it's not that at all. So let's take a look at this scenario and look at it also from the order book perspective. So we have a down move, and in the beginning it's convergent, and then it's starting to diverge, and we have a consolidation, and CVD is moving up. And you could have thought that this would be a good buy point, this bar here, because we have some spring type behavior, false breakout here, and then we have a pretty good bar here. And but no, it continues down, and CVD is still going up. Eventually, though, it turns into convergence to start moving up. But it took a while for it, and I will show you later on some charts where these divergences go on for sometimes years, actually. So you need to know what to do in those situations, and we're going to talk about those later. But let's look at how this works. It's the opposite of what I taught earlier, of course. We have price levels in the order book, and we have bulls trying really hard but failing to get through a sell wall. So we have a big sell wall, and the bears keep moving this down. We have all this aggressive buying is making CVD go up, and then we have price still going down because we only need a few aggressive sellers to target through these low liquidity buy levels. So they're selling into these buyers, very few buyers. And when this disappears, this level, they just move this down like this. And now we can do the same here. The bulls are still trying on this level, and it goes on and on and on like that. So the resting buy liquidity is easily taken out by a small number of bear orders. And if you think about it, the big players in the market, the CEO, the smart money, the institutions, the banks, whatever you want to call it, do you think that they are putting mainly limit orders or market orders? They're mainly putting limit orders because they would move the market too much if they used market orders. Sometimes they use market orders when they want to manipulate the price, but more often than not, they are putting limit orders. So all of this aggression, that doesn't lead to anything, where does it come from? It's obviously weak bulls that are doing this. So we're looking at this scenario here. We should switch our mindset completely now, because we have all these aggressive buying that doesn't lead to anything. It's just getting absorbed, and yet prices going down. So we have actually a case of weak bulls here and strong bears controlling the market. So just switch that thinking. Okay.